We have another rough day on Wall Street for AMC stock. AMC is down about 2.5% at the time of recording this video. Now, we do still have Discover earnings and after hours. There are certain things that will affect AMC stock potentially or the broader markets. But here in this video, we're going to go over everything that we know as of right now, what's going on, and talk about what's going to be coming for economic data coming tomorrow, Fed speakers, all of that. But I do actually want to start this video with Tom Lee. Now, Tom Lee, he's probably the best analyst in the world or close to it. I believe he's ranked like 30 on Tip Ranks analyst, somewhere around there. He was the only one that got the market prediction correct for what the S&P would do in 2023. He has a bold prediction for 2024. He thinks small mid-cap stocks could rally 50 or 60% as an index, as in the IWM could rally 50 or 60% this year. That would mean the average stock, maybe AMC, could rally 3 to 5x its value. I think that's pretty insightful. So let's go ahead and give him a listen. It's like 2 minutes, and then we'll be back to go over everything else you need to know on our markets and with AMC stock.
I want to be optimistic today, and you do remain bullish. 5,200, correct?
Yes.
On the S&P is your price target for the year. That is not changing.
Yeah, I think investors who are long-term oriented should really just ignore the first 6 months. You know, we have a Fed that's going to be shifting from being really tight to accommodative. Earnings are recovering. We've got interest rates coming down. That's great news for consumers. And I think businesses in general have a CapEx cycle ahead. So, I mean, the stock market should do well this year. It's just, it doesn't mean it's a straight up.
Well, that's about a 9% gain from where we are now. If you are also correct in that the market tumbles a little bit in the next couple of months, you know, we all know it takes a bigger gain to get back to where you were after a drop because of something called math. So it's going to take maybe a 15% jump from the trough to get to that 5,200.
Yes, Brian, that's right. I think there's a chance at some point this year, maybe it's June, you have a chance to make 20% between now and year end. And I think small caps could make a bigger move, 50 or 60%. So I think there's still...
What?
Yeah, I think the IWM could end the year, Russell 2000 could end above 3,000.
Now, I did not know you were going to say that. One of my 4 predictions, and no one cares what I think, but I do these predictions so people can tell me I'm wrong, and because they love to say you're wrong, right? Was that small caps would outperform the S&P 500. S&P 500 just seems 2.5 times sales, so far more expensive than any other major index around the world. It sounds like you would agree that people might start to find out there are a couple of other 1,000 stocks out there,
yes,
which may deserve their attention.
That's right. And small caps relative to S&P on a price to book basis back to where they were in 99. That was a launch point for 12 years of gain. So yeah, I'd agree with you. I think the calculus is favorable for small caps.
Repeat that. Small caps price to book 99.
Relative to the S&P 500 is back to where it was in 1999, which was the absolute low and was a launch point, 12 years of outperformance of small caps.
Wow, I wish I would have known that. I would have put that in my prediction. It sounded a lot smarter than I was. That's interesting.
So yeah, nonetheless, if Tom Lee is correct in that prediction, AMC stock, as long as we don't get a bunch of dilution in 2024, should also do well, because that means money is coming off the sidelines heading into the Russell 2000. Now, in case you guys don't know, the Russell 2000's market cap is around 2.78 trillion, roughly in that range. It does obviously fluctuate, right? Like institutions have 81% share of the Russell 2000, worth 1.67 trillion. So roughly in the neighborhood of $2 to $3 trillion at any period of time in recent history. Well, if you get $1 trillion coming into small caps, you're going to see a huge rally. A couple $100 billion going into small caps, you're going to see a massive rally. That's all we had over the last 90 days or so that sent, IWM up in the first place. We do have $6.2 trillion of investable capital. Investable capital is very important from my perspective, because you can sit there and say there's $20 trillion out there as far as the M2 money supply, and you would be correct. But out of that, how much is actually looking to be invested? That's the bigger question. Now, people's money in their bank accounts, that there's still money out there that can be invested besides the 6.2 trillion, but this is only looking at money market funds. Money market funds are basically somewhere where you put your money, kind of like an ETF, that takes an expense fee that gives you access to your money at all times. It's not like you have to go out, buy treasuries, go through the hassle of holding the treasuries and then selling the treasuries, just based on what the value is of the treasuries. You're not going to make or lose money off the face value of the treasuries. You're going to get paid the interest in a money market fund, but you don't have to take the duration risk, if you will. When the Fed starts to cut rates, obviously yields will fall in money market funds, but this gives you access to your money right away. This $6.2 trillion is already invested cash, right? So it can be moved around. It could go to small caps. It could come back to stocks in a very short amount of time. And I think that's important to pay attention to. This is by far the highest you've ever seen money market fund activity as well. You're more than double where you were in 2016, 2017, 2018. So there's definitely a lot of money sitting here in money market funds. And that actually continues. To this day, there is still more money going into money market funds. Now, as we reported earlier, Jamie Dimon and David Solomon, JP Morgan CEO, as well as Goldman Sachs CEO, they are basically sounding the alarm that things might not be okay out there in the economy. And that's exactly what we went over in the last video. So I don't want to highlight that too much, but I think it's important to pay attention to. You've also seen the 50-cent VIX trader coming back, and it seems like so far since this trade was put on, a $17 million bet on the markets, that volatility will pick up. It seems like volatility has started to pick up, but maybe we still do have more volatility to come. At least that would be my expectations. Now, as we went over as well, retail sales came in better than expected. This is pushing the odds of rate cuts down. So now the markets are starting to price in a little bit less aggressive rate cutting from the Fed, which is not great for stocks that have been trading on 6 or 7 rate cuts for 2024. It seems like we could start to price in maybe 5 rate cuts in the not so distant future. Now, coming tomorrow, you are going to get Fed Bostic that will speak at 7:30 in the morning. He is a voting member. He is a little bit more on the dovish side, so we'll have to see. Kind of in the middle, though. He can say hawkish things from time to time also. So we definitely want to watch to see what he is saying. And that could obviously move the markets coming tomorrow, but who knows ultimately. 8:30 in the morning, building permits will be coming out. It's highlighted in red here on the trading calendar. Expected to be a major volatility event. I'm not convinced that it will be, so we definitely just want to watch that to see if we're getting more building. More building should be good for housing inflation. And that's how the markets will take it. And then you're going to get initial jobless claims, housing starts, Philadelphia Fed Manufacturing Index. The New York Empire State Manufacturing Index just plummeted. So we want to see, does the Philadelphia Fed area as well plummet like the New York area? That would not be good. Philly Fed business conditions, Philly Fed CapEx Index, Philly Fed employment, Philly Fed new orders, and Philly Fed prices paid will also be coming out tomorrow, 8:30 in the morning. All of this data collectively, if it's sending a message of an economy slowing down or speeding up, that's really what we want to be watching. Now, Fed Bostic will also speak again at 11:30 a.m. tomorrow, and then he'll speak again at 12:05 p.m. tomorrow, so around noon, around lunchtime, and that's pretty much going to do it for your day tomorrow. After hours tomorrow, you will get the inflation rate year over year and month over month out of Japan. That will be important because this could be the first year Japan is raising rates in like 15 or 16 years. So if they do in fact raise rates, well, as you already know, if you watch this channel, Japan owns the most amount of U.S. treasuries. So if Japan starts to raise rates, you could see Japanese investment in U.S. treasuries switch back to Japanese investment in Japanese treasuries, and that would put more pressure on rates potentially going higher as well. So that could be a problem. We'll have to wait and see. Friday, you're going to get Michigan consumer sentiment as well. Fed Daily that will be speaking, and Fed Bar that will be speaking as well. But we still have to get through tomorrow first, and here earnings and after hours with Discover will also be very important. Good news is after Discover earnings, you have TSMC in the morning on Thursday, and then just a bunch of regional banks. So definitely want to watch the regional bank situation. Losses are still very high for the regional banks. That's not exactly fantastic news, as you can see here. The unrealized losses on investment securities, available for sale securities, held to maturity securities, this is with banks, are not looking so good. This source is from the FDIC itself. So there hasn't been much change in the actual unrealized gain or loss in treasuries. So we definitely, the banks definitely want to see some rate cuts coming here pretty dang soon. Now, good news is for our markets, as we went over in the last video, you are likely to see the end of QT coming pretty soon. This article from Zero Hedge says it's all over. Powell's Wall Street Journal mouthpiece and JP Morgan confirm imminent end of QT. JP Morgan expects QT to end in March and to start getting implemented in April. That's their assessment. Now, Real-Time Economics says Fed deliberations on slowing the shrinking of its holdings will start as soon as this month's policy meeting and aim to avoid disrupting financial markets. And as we do get an end to QT, this will be a stimulus-like boost for the markets. Now, JP Morgan also says we look for the monthly cap of the runoff of Treasury securities to be reduced to $30 billion a month, down from $60 billion a month. So a 50% haircut in the amount of treasuries the Fed is potentially rolling off their balance sheet. Again, that should be good news for stocks, especially for small and mid-cap stocks. And it's going to take the pressure off of the treasury market, right? Right now, there's a lot of bond auctioning, a lot of bond issuance, and then you also have the Fed rolling off the treasuries they bought like years ago. So you have these two things that are working to keep rates higher on the treasuries, and hopefully some of that pressure gets taken off here in the not so distant future. Now, Stocko tracker data for AMC, you can see about 1,800 calls currently in the money, 251,000 calls out the money, 94,000 puts in the money, and about 41,000 puts that are out the money. So definitely some option activity here. It could set us up for a major bounce or even potentially breaking under $4 per share coming by the end of this week. Again, Discover earnings, some of the data, the Fed that we will have over the next 48 hours will really dictate what happens with AMC and the broader markets. But seeing this kind of option activity in AMC stock is never going to be a bad thing also. Some of the biggest news on the day today for AMC is Citibank adjust the price target on AMC Entertainment to $4.10 from $5.75. And they also maintain their sell rating on AMC. Taking a look at the option activity today, you have seen 10 orders totaling about $200,000 from hedge funds and institutions, with a positive order value of 0% today in AMC stock. So it does not look like hedge funds and institutions are that excited on AMC stock right now. Even volume across the board from even retail investors is on the put side as well. Volume on the put side of 56%, volume on the call side of 44%. First time in a while that you see retail bearish just like hedge funds and institutions. So I think that's not so great. You do have a short interest of free float that is continuing to rise. Now, I put that in air quotes because I do think AMC is hundreds of percent sold short. I think the numbers we're seeing on Ortex, a slight reflection of the situation. I think it's a lot higher of short interest than 10%, specifically 9.79%. But that's the legal number I can share with you guys here in this video. We do have $103 million worth of short positions currently in AMC stock. Days to cover 1.27. 24.53 million shares currently sold short. 21.59 million shares currently out on loan. Cost to borrow 1.12% and utilization of 31.11% with a short score of 55.83 out of 100. You do have cost to borrow max at about 3%, cost to borrow average at about 2.08%. Now here on the day today, you are continuing to see 10-year treasury yields rising. 10-year treasury yields up about 3 basis points. 2-year treasuries up more than that. 2-year treasuries up about 14 basis points here on the day today to 4.36%. So not exactly great. And this is continuing to put some pressure on stocks, that is for sure. And here at the time of recording this video, what the markets are currently pricing for Fed policy, well, for March, almost a 56% chance of the first cut, 43% chance of a continued pause. For December, you are still pricing in 6 rate cuts. Let's count. 1, 2, 3, 4, 5, 6. Yep. But 5 rate cuts is definitely growing. 5 rate cuts yesterday was 15.7% of a chance, the odds. And now they're 29%. Yesterday, 6 rate cuts was 37.4%. Today, it's 38.8%. So the odds of 6 rate cuts are actually rising, but the odds of 7 rate cuts are falling. And that's what is helping to give the markets at least some downside here today. Now, again, AMC stock, like I said in the last video, not too much has actually changed from the charts. AMC stock currently at $4.11 at the time of recording this video. The RSI being now under 18. You are the most oversold you've ever been for AMC. That's because we just continue to fall pretty much each and every single day. It's red day after red day after red day. So it's pretty rough there. The MACD kind of trading sideways, not doing a whole lot of anything. And AMC stock overall in a bit of a precarious situation. If you don't bounce at $4, if you don't see a lot of demand come in there, then you're probably falling back into the 3s and subsequently into the low 3s. Whether or not we get dilution or not could really be the deciding factor of whether we stop out here or maybe fall much lower than that. Like if we were to get dilution right now, you're probably going to fall to like $2 per share for AMC stock, maybe even lower. So I think it's highly unlikely we get dilution here, but then again, anything is possible. Oil on the day today down about 0.5%. The dollar up 1%. The dollar's just pretty much been going vertical since the start of 2024. This is giving us a lot of downside in your average stock, at least as well here in 2024. The dollar's a reason why small and mid cap stocks have not started to outperform so far, in my personal opinion. Gold is down about 1% today. This is actually great because gold was looking a little too good for comfort. Maybe someone knew something out there and maybe the situation in the economy was about to get worse, but gold starting to fall, I actually think that is fantastic. Now, I do expect a lot of volatility over the next couple of weeks. I do think stocks are going to come down from here. Puts AMC in a pretty bad position because if AMC, if markets do fall, AMC is going to fall more. You're already at very low levels, so it could be a while before we see a bounce. But like Tom Lee says, I do think small caps will be the big winners by the end of this year. So ultimately, it could be a sideways or down kind of market for AMC for a period of time. But I do think towards the end of this year, buying AMC stock at $4 per share makes some sense, especially, again, given I do think we will get a commitment to not see dilution for a period of time. So that's going to do it for this video. Let me know what you think about this information down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.